Stop. Before you touch a single dollar in your bank account, you need to watch this video. Because what's happening right now in Canada in 2026 is affecting everyday people. Teachers, contractors, landlords, small business owners, people who have done absolutely nothing wrong, but are waking up to frozen accounts, CRA letters, and compliance holds they never saw coming. And it all comes down to one number, $20,000. Welcome back to Credit Smart Canada. I'm glad you're here today because this one could genuinely save you from a financial nightmare that is way more common than the banks want you to know about. Let's get right into it. Canada has some of the strictest anti-money laundering laws on the planet. FINTRAC, that's the Financial Transactions and Reports Analysis Centre of Canada, requires every single financial institution in this country to report certain transactions directly to the federal government. No exceptions, no warnings to you. It just happens automatically behind the scenes the moment your account hits specific thresholds. And the number that triggers the most flags, the one that catches Canadians completely off guard, is $20,000 in cash. Here's exactly what the rule says. If you deposit cash, physical bills, totaling $10,000 or more in a single transaction, your bank is legally required to file what's called a large cash transaction report with FINTRAC within 24 hours. But here's where people get tripped up. It's not just one big deposit. If your bank believes that multiple smaller deposits are connected, say you deposit $4,000 on Monday, $5,000 on Wednesday, and $6,000 on Friday, they can and will aggregate those transactions. That's called structuring, and it is a federal offense in Canada, even if every single dollar you deposited was completely legitimate money that you earned yourself. Let that sink in for a second. You could be a contractor who got paid in cash for a renovation job. You could be someone who sold a car privately. You could be a landlord collecting first and last month's rent in cash. You could have taken money out of your RRSP or received a gift from a family member. None of that makes you a criminal. But if you walk into your bank branch and deposit that cash in a way that triggers their automated monitoring systems, your account can get flagged, reviewed, and in some cases temporarily restricted before you even get a single phone call. And 2026 has made this worse. Banks across Canada have significantly upgraded their transaction monitoring systems. The algorithms are smarter, the thresholds have been recalibrated, and compliance departments are under more pressure than ever to catch suspicious patterns. What used to fly under the radar 2 or 3 years ago is now getting flagged in real time. So what does getting flagged actually mean for you? It doesn't always mean your account gets frozen immediately, but it can mean a few things. Your bank might place a hold on the deposit for several business days. They might send your account to their internal compliance team for review. In more serious cases, they'll close your account entirely and send you a letter, and they are not legally required to tell you why. That's the part that shocks most people. Banks in Canada can close your account and they don't have to give you a specific reason. On top of that, if FINTRAC becomes involved and they decide to refer the file to law enforcement, you could be looking at a CRA audit, questions about your income sources going back years, and a legal process that is expensive and emotionally draining even when you come out the other side completely clean. Now here's what Credit Smart Canada wants you to actually do with this information, because this video is not about scaring you, it's about arming you. Number 1, if you regularly deal in cash, talk to your bank. Seriously. Go in, speak to a branch manager or a personal banking advisor, and explain your situation. Tell them you're a contractor, a landlord, a business owner, whatever applies to you. Ask them to note your account. This doesn't guarantee anything, but it creates a paper trail that works in your favor. Banks flag anomalies. If your account has context attached to it, anomalies become less alarming. Number 2, keep your receipts and document everything. If someone pays you $10,000 cash for a used vehicle, get a bill of sale. If you're collecting rent, keep signed receipts. If you're pulling money from an investment account and redepositing it at your checking account branch, bring your statement. Documentation is your best friend if your bank ever questions you. Number 3, understand that e-transfers and electronic payments are far safer from a compliance standpoint for large amounts. If someone is paying you a significant sum, encourage them to send it electronically. There's still a paper trail for FINTRAC, but it's much less likely to trigger the same kind of immediate flag as a cash deposit. Number 4, if you are ever notified that your account is under review or being closed, do not panic and do not start moving money around quickly. That kind of rapid movement after a flag is one of the worst things you can do because it signals panic and evasion to the very systems already watching your account. Number 5, if you believe your account has been wrongfully flagged or closed, you have options. The Ombudsman for Banking Services and Investments, known as OBSI, is a free and independent service that can review your complaint if your bank has not resolved it fairly. You don't need a lawyer to reach out to OBSI. You just need to document what happened and submit your case. Here's the bigger picture that Credit Smart Canada wants you to understand. These rules exist for real reasons. Money laundering, terrorist financing, tax evasion, these are genuine problems, and Canada's financial system has an obligation to address them. But the reality is that the tools used to catch bad actors also catch good, honest Canadians who just didn't know the rules. And ignorance of the rule doesn't protect you. That's why this channel exists. That's why this video needed to be made. The $20,000 warning is not just about one number. It's about understanding that in 2026, every large cash transaction in Canada leaves a footprint, every pattern your account creates tells a story, and your bank is reading that story whether you realize it or not. You get to control the narrative by being informed, being documented, and being proactive. If this video opened your eyes even a little bit, please share it with someone you know. A family member, a friend who runs a small business, a landlord in your building. This is the kind of information that doesn't get shared enough, and it genuinely matters. At Credit Smart Canada, we are here every week breaking down the financial rules, credit traps, and banking realities that affect real Canadians in real life. Hit subscribe if you haven't already. Drop your questions in the comments below because I read every single one, and I'll see you in the next video. Stay smart, stay protected. Canada, take care of yourselves.